PPG's about to break ground on a massive $380 million aerospace facility in October, and this could either prove their aerospace bet is genius or expose a company burning cash while losing market share. PPG Industries, ticker PPG, is a $25 billion global leader in paints, coatings, and specialty materials, serving aerospace, automotive, and industrial markets across over 70 countries. They've raised their dividend for 53 consecutive years. But this massive facility investment faces serious scrutiny. But here's what could cost you if you're not careful. PPG is hemorrhaging market share and cash flow at an alarming rate. Their market share crashed from 14.17% to just 12.39% in 6 months, while revenue fell to 0.4% in 2024. Even worse, free cash flow absolutely collapsed 63% year over year to just $700 million in 2024. That's a massive red flag for a dividend aristocrat. Operating cash flow also plummeted 41%. And with debt climbing to $5.57 billion, investors are starting to panic about whether they can sustain that dividend streak. However, while everyone else panics about these headline numbers, here's the massive opportunity smart money is positioning for PPG. Just posted record aerospace sales in Q2 2025 with a $300 million backlog and explosive organic growth. Their aerospace segment is absolutely crushing it as global aviation recovery accelerates. Plus, they've achieved 9 straight quarters of segment EBITDA margin gains, with performance coatings hitting an industry-leading 25.7% margin. That's exceptional operational excellence that most investors are completely missing. While they focus on the top-line noise, and that's not the only reason institutional money is accumulating. PPG strategically divested their lower-margin businesses like US and Canada architectural coatings, allowing them to focus entirely on high-value, high-margin aerospace, marine, and industrial coatings. They're investing $600 million annually in R&D, with 41% of their sales now coming from sustainably advantaged products commanding premium pricing. Recent analyst upgrades from Deutsche Bank, Goldman Sachs, and Wells Fargo point to a $135 price target. That's a 15% upside. All of this comes at a critical moment. The $380 million Shelby, North Carolina facility groundbreaking in October 2025 will either validate their aerospace confidence or become a monument to poor capital allocation during a cash flow crisis. This groundbreaking will show whether PPG's betting on the right future or doubling down on the wrong strategy. What do you think? Is PPG's $380 million pivot a smart bet or reckless? Drop your prediction below.